Hello everyone, welcome back to my YouTube channel. These days, the stock market is trying its best to recover from its March and February downtrend. However, the global pandemic lockdown still continues. So you may ask, why the stock market going uptrend when the economy is still going down? Well, the stock market always ahead of everything. It's ahead of itself, ahead of everything else in the world, ahead of economy recovery. During the economy uncertainties, many companies are worried about their earnings, especially for the Q2, Q3, and Q4 earnings for this year. So some of the companies hold on to their dividend payout. Some of the companies reduce their dividend yield. However, I spotted 3 mega cap companies that recently announced dividend yield increase. That's a huge good news to dividend investors like us. So in today's video, I will share with you these 3 companies, their dividend payout and the percentage of dividend increase, as well as I will share with you their stock charts to show you when probably will be the better entry point for these 3 stocks. And also please leave in the comment below if you have spotted any good companies that increased their dividend lately. Without any further ado, let's get started. First, let's have a brief review of what is a stock dividend. A stock dividend is the company reward shareholders from its earnings in terms of shares in the stock instead of paying in the cash. In that way, the company can reserve its cash balance. However, because of the dividend payout percentage is smaller than the share itself, so the dividend payout is only fractional of the shares of the existing stock that the shareholder holds. The dividend payout is the best passive income every stock investors can get because it can be compounded and increase your additional dividend income. Most companies will pay out in quarterly basis. Some of them will pay out on monthly basis. Now, how is dividend yield calculated? It is calculated by the annual dividend of that stock divided by that stock price per share times 100. So the annual dividend yield is a percentage. For example, the annual dividend for a stock is $5 in total. And then the stock price is $100 per share. So you can calculate that stock annual dividend yield will be 5%. From this formula, you can clearly see the dividend yield is not an absolute number. For example, the dividend was increased from $5 to $10 per year, and then the stock price stays at $100. Then the dividend yield will become 10% instead of 5%. On the other hand, if the annual dividend stays at the same, still at $5, but the stock price increased from $100 to $200, then this stock's dividend yield will become only 2.5% instead of 5%. First company that increased the dividend yield is Procter Gamble. Everybody knows Procter Gamble. It's a consumer staples company. It produces household products. Currently, the market cap is $286 billion with a PE ratio at 24.34. It has a history of increase its dividends for past 33 years. Procter Gamble recently announced the dividend increase from 0.7459 cents to 0.7907 cents. So the dividend yield currently is at 2.63%. So it's a whopping 6% increase from previous dividend payout. As you can see, the total return of Procter Gamble for year to date, including the biggest market crash recently, it's at a minus 2.14%, while the S&P 500 was at minus 12.83%. So as recent week, it's much higher than S&P 500, so as the recent 6 months as well as the recent 5 years. Second company recently announced the dividend increase is Johnson & Johnson. It is a pharmaceutical company in the healthcare sector. Johnson & Johnson has its market cap about $368.48 billion. The current PE ratio is at 19.35. It also has a very long history of dividend growth. It's about 57 past years. It continuously increased its dividend payout. Not only that, on the 14th of April, Johnson & Johnson just announced its quarterly report. It beat both top line and bottom line and then slightly adjusted its forward guidance as well as increased its dividend payout. So that's huge. Johnson & Johnson has many familiar products. You're probably familiar with its baby products, but Johnson & Johnson is much more than that. It's currently involved in research and manufacturing coronavirus vaccines. So it's a very promising company. Johnson & Johnson increased its dividend from 95 cents to $1.01 per share per quarterly. So it's increased the dividend payout about 6.32%. Current dividend yield is at 2.7%. As you can see, year to date, total return of Johnson & Johnson is at a plus 3.26% with a very impressive 1 week return and also equals 1 month's return of S&P 500, but much better 6 months return as compared to S&P 500. Also, 5-year and 10 years both beat S&P 500. The third company recently announced dividend increase is Costco. Costco is a hypermarkets and supercenters within the consumer staple sector. Nowadays, Costco is a huge demand to many people. You can see the long line even before the Costco open in the morning. People stock their household goodies, including the food, toilet paper, and any other supplies, prepare themselves to be housebound and social distancing. Costco not only has lots of foot traffic in its warehouse, it also offers Costco.com, where you can order everything online and then to be delivered to your door. Costco has a market cap about $132.31 billion with a current PE at 36.76. It also has a long term of dividend growth history, about 15 years. Costco recently announced the dividend increased from 65 cents per share to 70 cents per share. That's a whopping 7.69% increase. Due to the Costco high price, so the current dividend yield is at 0.87%. As you can see, compared to S&P 500, year to date, Costco total return is 9.63% versus S&P minus 12.83%. And then you can see it beats S&P 500. Doesn't matter 1 week or 1 month or 6 months or 5 years and 10 years, it beats hugely of S&P 500. So Costco stock is a very profitable stock to hold on to. The payout ratio for Procter Gamble is about 63.31%. For Johnson & Johnson is about 52.24%. For Costco, it's only at 33.1%. The current price for Procter Gamble is the lowest, about $124.69. For Johnson & Johnson, it is about $152.09. For Costco, as I said, it's the most expensive one. Current price is $317.92. From the stock chart, you can see Procter Gamble almost had a V-shaped return from this stock market crisis. And also the price is very close to its all-time high, which is set at about $128.34. It's only a few dollars away from all-time high. The most recent ex-dividend day is on April the 23rd. So if you want to play this dividend play this time, then you can get in at least April the 22nd, just one day before the ex-dividend day. As you can see, the price increase is backed by a huge volume. So that means institutional buying. MACD is slightly overbought. RSI still has potential, but MACD seems like a slightly overbought. So you may see a little bit of price fluctuating before the ex-dividend day, but still you can get in to play this dividend play. But after the ex-dividend day, you probably will see the price going downtrend for a little while. So it's all depend on you when you want to get in. The chart for Johnson & Johnson is very similar as compared to Procter Gamble. It also had a typical V-shape recovery, and also the price is inches away from its all-time high. All-time high is at $154.45, and then the current price is only less than $2. You will get at the highest high. Johnson & Johnson, the next ex-dividend day is May the 22nd. As you can see, these few days, the return of the price of Johnson & Johnson is backed by big volume, but the MACD also shows a little bit overbought. Even RSI still has little way to go. In the near term, Johnson & Johnson may go across this all-time high, but it will come down slightly. You still have lots of room to run. You have until the May the 21st to get into the stock to be paid as this time dividend earning. So you still have lots of room to go. So you can on the sideline observe a little bit, wait it's retrace a little bit, then get in. The chart for Costco is also very strong. You can see its recent all-time high was set on February the 20th. It has a quick V-shaped recovery, returned to all-time high on March the 5th. And then it had another V-shaped return combined with this cup and handle form. Also, you can probably consider the whole structure as a cup and then handle. Near future of Costco stock could be hitting this all-time high and go beyond. But by looking at the MACD, it's a little bit overbought. RSI still has room to run. And then the near-term ex-dividend day is April the 30th. So you have about a week and a half to decide when to get in. The latest time you can get in is April the 29th. So you can sit on the sideline and watch the stock chart move and to see if it will retrace. They'll be better for you to get in at a better price. If you want to play this dividend day play, you can get in. If not, you can wait until after dividend day and then get in. So it's all depend on you. This ends today's video. During the market turmoil, if any companies can increase their dividend yield, that means they have huge confidence in their company that they can withstand this economy crisis. Johnson & Johnson, Procter Gamble, and Costco, they are the best of the best companies. They are actually the beneficiary of the global pandemic and social distancing. So by holding those stocks or get into those stocks that you're holding the best companies, in the meantime, you are enjoying their dividend increase. If you liked today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.